By the time Wall Street tells you money is rotating, it's already too late. Headlines react, but prices move first. Now let's explore how smart money detects these shifts before anyone else notices. Today, I'll show you how to spot sector rotation before it becomes news. Welcome to Money Mastery, your step-by-step guide to financial freedom and wealth creation. This isn't about making predictions. It's about careful observation of what's already happening. A market always whispers before it screams. Let's talk about sector rotation, the quiet force that moves billions between different parts of the stock market. Sector rotation happens when large money shifts from one group of stocks to another, driven by risk, reward, and opportunity. Here's the key insight. Rotation is a process, not an event, unfolding gradually as capital reallocates over time. Most retail investors spot rotation too late, missing the entry points institutions already secured. By the time headlines change, analysts upgrade, and YouTubers chase performance, institutions are already positioned. Smart money moves quietly, flowing into new sectors without fanfare or public attention. The most important signal is relative strength, which reveals rotation by comparing how sectors perform against each other. Forget absolute performance. Focus on relative performance to see which sectors are truly leading. A strong sector rises when markets are flat, or falls less when markets decline, revealing accumulation. That's not luck. That's accumulation. Deliberate institutional buying disguised as market noise. The second signal is watching which sector stops falling first during corrections. When one sector stabilizes while others keep falling, that relative strength often signals future leadership. Leadership is born during weakness, emerging when resilient sectors stand out against broader market declines. Volume tells the truth about rotation before price movements become obvious. Look for rising volume, consistent buying on red days, and strong closes near highs. This is how institutions enter, slowly, patiently, invisibly, building positions beneath retail radar. Index divergence is the fourth signal, occurring when major indexes stop moving together. When large caps stall while small caps rise, that divergence reveals capital shifting between market segments. Similarly, when tech weakens as value strengthens, rotation between growth and value styles is underway. Growth pausing while defensives climb signals rotation toward safety during uncertain conditions. Divergence is not noise, it's rotation in progress, meaningful signal demanding attention. A bond market often signals sector rotation before stocks reflect the change. Falling yields typically precede defensive rotation as capital seeks stability. Rising yields typically precede value rotation as capital moves toward economically sensitive sectors. Bonds lead, stocks follow. Fixed income markets provide early warnings for equity rotation. Spotting rotation doesn't justify certain destructive behaviors that undermine disciplined trading. Avoid chasing green candles, abandoning your system, or overtrading in response to rotation signals. Rotation rewards patience, not excitement. Success requires disciplined waiting and systematic execution. You don't need 20 indicators, just a simple routine applied consistently. Track sector performance weekly, compare strength during pullbacks, watch volume behavior, and wait for confirmation. Clarity comes from consistency. Understanding emerges through regular application of simple observation. Wall Street doesn't predict rotation either. Even institutions identify and follow emerging patterns. The real edge is not knowing first. It's noticing early and acting calmly when others react emotionally. If this video helped you see markets differently, go ahead and hit that like button. Subscribe to Money Mastery for your step-by-step guide to financial freedom and wealth creation. Next, I'll show you how to build a simple rotation-based portfolio without guessing. The upcoming video covers a rotation strategy that takes the guesswork out of investing.